But because it's bouncing off of this for the time here, 1, 2, 3, 4, 5 times to hit it, I'm getting kind of annoyed. I don't like what the market internals are doing. I do, however, see that we have a nice potential for a nice gap lower tomorrow based on the ad. We're close in this area here where there's a high potential for a nice gap lower. Welcome back, guys. Ron here once again, and before we get started, go ahead and give this video a thumbs up if you are enjoying it, and give it a thumbs down if you're not. So once you watch it, just don't forget, guys, show your support for the channel. If you have not subscribed, go ahead and click the subscribe button and notification bell so you get notified every time we upload a new video. So let's go ahead and get straight into it. More perfect setup here. We have the RSI at the peaks. Obviously, Amazon pushed higher on the daily. It definitely bounced off of this trend line over here, but it looks like the markets are ready to start pushing lower for the start of the year, especially with a high VIX. The VIX is pushing higher. So I'm looking for this thing to start pushing lower now after it reached this peak for the day, for the morning, from 31.65, went all the way up to 32.17 on an average move of $80 per day. It looks like it's exhausted already for the day. It looks like it wants to turn around. Obviously, our stop is going to be right here, 32.17. But it looks like it's pretty good. It's pretty solid. On the 30-minute, you can see here that it hit that 50 MA, and it just having a little trouble getting past that line. Looking at the markets themselves, let's take a look at these. Same thing, right? So they're all exhausted. RSI is way overbought, and it's time for them to start pushing lower as the Dow and the E-mini start pushing back below this pivot. It gives me significant confidence that this move is going to play out. But again, we're watching it closely because anything can happen, right? Especially with this political situation going on in the markets right now. Same thing here with the VIX bouncing off of the pivot. It wants to go higher. If everything starts to reverse around on these pivots, then the play is dead. Immediately reverse, get out, and just wait for another entry. And then the ad, again, it's on positive territory, but I'm watching it closely here. It looks like it wants to start pushing lower. So those declining issues are starting to take hold. It looks like we're going to start getting a nice solid push today. So we'll see what happens in the next hour or so, or for the rest of the day. Got the 3,200 puts here. So we'll see how those play out. And this is what the position looks like. Let's go ahead and take a look at the positions. So I already had some from last night on the 31.50 puts. So you can see I'm down on those by quite a bit, 7,200. I got a couple of spreads in. And as you can see, some of those are green, some of those are bad. But overall, I'm down $4,600. So we'll see how this play turns out. I'm expecting a loss on the 31.65, 31.70 puts. I already locked in a solid profit on the 32.45, 32.40. So no matter what, I'm making money on that one. My concern right now are the single puts, right? So the ones that are not locked in, any profits, no profits are locked in. So these 31.50s and these 3200s. So again, the 3200s are a recent add-on right here, just based on the entry criteria that we have here. So we're going to play the reversal and expect the markets to start picking up that crash that they initiated yesterday. So the markets came down very hard for the first trading day of the year yesterday. Today, they try to attempt a recovery. I've been watching it closely just to see, just because they pushed so fast, so hard in the morning, it just, if it wouldn't have been that fast, it probably would have kept going. But currently, just my initial analysis and what I've seen before is just telling me, hey, this is not going to continue. It's a bull trap, right? So it kind of suckers you in to start buying. And you buy, and then you bought at the top, and then you get stuck there. 2-hour mark since we initiated this position. I don't like what it's doing. I was expecting it to just continue going lower, but it bounced off of yesterday's close, as you can see here. And now it's back at around the pivot, which is putting us in a predicament because now my position is getting close to my original entry location. And because of theta, everything is not going to work, might not work out as much, right? So you can see here, I entered this position at 37.50. It's right here, at 3,200. And what I'm looking for now is to lock this position in so that no matter what, I make a profit. So as you can see here, 37.50, you add 5, you're looking at 42.50 is the minimum you need on the opposing strike so that you break even at 0 if it does continue to go lower, but you do make a profit if it does go back up higher. So as you can see here, I'll make 500, the full spread, or I'll make $0 if it ends up going lower, right? So I'm looking at the 32.05 strike, as you can see here. Let's go back. 32.05, right now 42.55. So anything above 42.50, I'm making money no matter what. So it's a free money basically on the spread, which is, ideally this is how you want to put your spreads in. So remember, theta's going to kick in no matter what, and these things are going to lose value. So if any of these two end up out of the money, or both of them, obviously I'll make the full spread. If only one of them ends out outside of the money, I'll make a partial profit, as you can see on the diagram here when you analyze, right? So as you can see here, we want this thing above 32.05 if it's not going to go. Looking at the daily chart though, I'm more on the bearish side. I do believe Amazon and the markets overall are going to have a push lower, but obviously I don't want to add to the pain, right? So I'm in a situation where now I have to make a decision whether I want to keep holding on to this and potentially add to the pain of this 7,100 here, or just lock this in and figure out what to do with this one. Either I'm going to close it, convert it into a spread somehow, or do something creative so that I can, hey, get myself out of this $7,000 hole, right? So that's what I kind of have to do here now. So, I get paid to make decisions. We get paid as traders to make decisions, right? We're paying ourselves to make adequate decisions based on the information we have now, not what we think, not what we hope, not what anybody else says, right? So you have to study what you see and kind of make a decision from there. So and I get a lot of questions regarding this, how do I convert it into a spread? How do I convert it to a spread? So that's pretty much it, guys. So you entered a single put or call. You can see here I'm risking 37.50 to make potentially endless amounts depending on where I think this thing is going to go. If this thing were to drop to today's low of 30.70 on the pivot, 30.70, I would make easy $9,400 from this thing, as you can see here, right? Ideally, at the close, if I let it expire, I'll make $8,900. So it's like, okay, well, I'm risking 37.50 to make X amount of dollars if it makes it all the way down there. I'm not expecting it to make it all the way down there anymore, especially not today, just because of the lack of momentum, right? So since they're dried up. But as you can see here, if I say, okay, well, now I'm getting tired of this. I don't want to risk 37.50 anymore. You know what? I want to lock my profits in. So anything above 42.50, and you can see here, you can make, minimum of $85 if it does continue to go lower, if it does reverse, etc. So the higher this price goes, the more you're going to make no matter what. You're making money, right? Ideally, you want to make thousands, obviously, right? We all want to make thousands, but money is money, guys. So if you're making 170 guaranteed, between 170 to $670, that's still money in your pocket, right? So you got to take that into consideration. Alternatively, you can do the flip side and you can say, hey, you know what? What if I did the opposing side? I do believe it's going to keep going down. So what if I did the 31.95? All right, well, let's go ahead and check that one out. So we do the 31.95. Let's go ahead and analyze the trade. And the same scenario here, guys. Okay, so we paid $37.50 for the original one. So now this one, at a minimum, needs to be, let's go ahead and see. So you can see here, if I sold it at where it is now, no matter what, I'm going to make a profit if it goes higher. Here we go. I'm looking at 230, right? So let's go ahead and lower this. Let's see what our break-even point would be. Well, 37.50 should be. Yep, 37.50, right? So 37.50 is what we're looking at. Break-even at 37.50 for one strike below our strike. All right, cool. So anything above that, again, you're making money. And if we are expecting it to go lower, this may not be a bad idea to do it this way. So it's like, okay, well, you know what? Maybe I'll do the opposite side. And here, I'll lock, some profit here if it goes reverses against me, but I'll make a little bit more if it continues to go lower. So looking at the charts, let's take a look back at the intraday. All right, we're looking like Amazon is bouncing off that pivot. Now it's acting as resistance. Let's take a look. These are at $39, $40 right now. So again, the higher those go. So that may be the way I go with this. I'm watching it closely. I'm getting a little tired of sitting around. I do need to go take care of my Airbnb, but I'm gonna watch it on my phone. Hopefully, I'm able to catch this and record it as I execute this trade. But as you can see here, guys, those are the options. when you're dealing with options, you have alternatives. You don't have to just buy and close. You can give yourself more opportunity, right, to make more. And in some scenarios, guys, when the thing goes against you, you can buy back the one that you sold, and now let the one that you bought continue to run and continue to make you more profit. So you have to keep things like that in mind, all right? Because you want to maximize your potential profits, but you want to be smart about it, right? You don't want to be reckless. You don't want to be too greedy when you're doing this. And don't be ashamed to take a $50 profit, a $120 profit. You know, it adds up little by little. It adds up, and before you know it, you have thousands per week. You have hundreds of thousands for the year. So just keep that in mind. I'll be back later on. Let's see how this trade ends up playing out, guys. Okay, guys. Well, that didn't take long at all. I'm not liking what I'm seeing on the market internals. So I'm seeing that the VIX, the tick is breaking out hardly. The VIX is starting to break out below its targets and going below this pivot. So you can see the down is starting to break higher. So I'm going to go ahead and lock this profit in. It's not going to be much, but it is what it is. I am expecting it to continue lower, so I'm going to do the 31.95 version of this lock-in. I could always get back in, so you always remember, we can always get back in, right? So let's go ahead and lock this profit in. And before we do that, let's slow down. Let's take a quick look. Let's make sure that this is what is going to happen. So we always want to take a deep breath and kind of, hey, let's slow down and see if this is what it's going to do, right? Is this a fake out, or is this actually going to go, right? So I'm watching everything on this screen. So I can see the down, and you see the NASDAQ tends to be a little delayed, right? The down tends to push lower. The NASDAQ is a little delayed, right? So here we go at 10 o'clock. This is 9:40, 9:50, 10 o'clock, right? 10:10. You didn't start seeing the decrease until 10:10 on the NASDAQ, right? So I'm looking at the NASDAQ because that's where Amazon belongs. So I want to pay attention to that one. So you can see here we're getting pre-warnings on the other two, on the E-minis and the Dow. The NASDAQ tends to be a little bit delayed. So I want to make sure I'm paying attention to all those cues that are coming in. So paying attention to that, I'm like, okay, well, let's see. Let's take a slow breath. Make sure that the trade doesn't get away from us. So I want to make sure, remember, 37.50 is the minimum, but anything above that, we're making money. So I want to make sure I'm ready to go. So alternatively, what I do is I keep the trade ready to go on my phone. So remember, use the tools that you have available to you guys. So if you have Thinkorswim, pull it up on your phone and you say, okay, go to Amazon, and then you open it up and just have the trade ready to go there, all right? So let's keep an eye on this chart and see what happens. But in the meantime, I'm gonna prep myself on the phone, and just in case this does start to push back up, I'll execute this trade and we'll get out of it. All right, so I'm ready there. And no less than 37.50 is what we're looking for, obviously, but let's see what happens here. It could have easily been a fake out, as you can see here. I don't like the VIX. The VIX is looking great on the daily. I honestly, based on my analysis, I can definitely see the markets continuing to push lower for the rest of the week. But again, anything can happen, and I'm going to play what I see now because I'm not worried about tomorrow. Anything can happen overnight, especially with this, again, with this political market. So I don't want to get caught by surprise by anything. So I'd rather make wise decisions now and adjust as I go. And if I have to take the pain and take that $7,000 loss, I'll take the $7,000 loss and move on, guys. It's not a big deal. We can always get back in. We can always recuperate. All right. All right. So here we go. I'm going to go ahead and lock that in because it's not doing what I wanted to do. There's the order. Put it in 39.25. See if we get a fill. It's not getting filled. Let's lower it to 39. All right, so we changed it to 39, guys. So here we go. This is what that looks like. Let's get rid of this. All right, 31, 31.95, 3,200. So this is what that looks like. $150 no matter what. If it reverses higher, if it goes lower, we're looking at 650 bucks. Cool. Now, we'll move on. Again, like I said, my concern with this and the reason why I decided to do it now is because, again, the VIX started to push lower, looking like it wants to go below the pivot. The ad is starting to push higher once again in positive territory. The NASDAQ came back above the pivot, and staying above it. Don't like that. So again, we got this massive push here, which was the first indicator that I looked at. Okay, whoa, what's going on? NASDAQ E-minis, Dow E-minis, again, also pushed higher. NASDAQ tends to have a 10-minute delay. So I'm like, okay, well, what is it going to do? And now, as you can see, now we're pushing higher. Now this one is starting to push higher. So I took my profits and I called it a day. Now, looking at the other position, I'm going to give it a little bit more time. If Amazon does end up closing above this pivot, I will go ahead and take that $7,000 loss, probably more by then. But for now, I'm going to be a little patient with those ones. And I'll make a decision. So this is my final stop here. As long as it's here, it stays below this pivot here, I may or may not hold it for tomorrow. I have to kind of analyze it a little bit more to see what I want to do. But obviously, I don't want to add to the pain. So if I can lock in a profit, I'll lock it in for now, especially since I'm going to be walking away. All right, so that's it for today. We'll continue following Amazon and the rest of these stocks as we go on. See, catch you guys later. All right, and that didn't take long at all. So now that I've analyzed it a little bit more, guys, and I do believe that Amazon is going to continue to go lower, we may end up getting a push here. Again, the tick, the internals, everything is giving me certain signs. So I'm going to go ahead and make this play. I'm going to go ahead and close the one I just bought on my 32.40s and my 32.45s. As you can see here, I sold the 32.45 in the expectation it may go back up. As you can see, I'm in the green. I'm going to go ahead and close those and take the profit on those. Right, so I'm going to go ahead and buy those back for less than I paid for them. So I sold those for 77. I'm going to go ahead and buy those back for less. Let's go ahead and do that. Let's see on the phone. Let me do it on the phone because it'll go by a little bit faster. There you go. So I've closed that position. I'm still up a couple thousand on the original position, as you can see here. So the 32.40s are up 2,200. I just collected about $600 to $700 here, which is going to be more than the initial maximum profit I was going to make on this one on the way down, which was only going to be $26.50. So if I were to lock this one out now, obviously I would make more. On the way up, I was going to make $31.50. But like I said, I am expecting Amazon to continue lower. Unfortunately, I did just lock the other position at 3,200, which was a really good strike to have in the money. But I have the 32.40s in the money, which I can be a little bit more patient since is way deeper in the money. So I'm gonna watch this now. I was about to head out, but I did start to push lower instead of higher. So let's see if it manages to break below this previous day's close. And now with that 2,000, I can easily knock out the other position and just make Amazon break even, or just continue to hold and let these puppies ride out. So we'll see what happens here. I'm going to continue to watch, and before I make any other trades, I'll come back. Okay, so here we go once again. Again, it's having a really hard time breaking through the previous day's close on the downside. It's kind of really annoying. Had it already broken through, we would have had a nice push lower. So I'm getting to the point where I'm going to lock this back up. And just lock this position back up for my profit. As you can see, I already collected 700. I'm going to lock it back in, and minimum we'll make is 1790 plus what I already made. We're looking at the 2650 at least that I was going to make already, or we'll make 2290. So still over $3,100 depending on which way this ends up going. But because it's bouncing off of this for the time here, 1, 2, 3, 4. 5 times to hit it, I'm getting kind of annoyed. I don't like what the market internals are doing. I do, however, see that we have a nice potential for a nice gap lower tomorrow based on the ad. We're close in this area here where there's a high potential for a nice gap lower. But again, like I said before, there's no need to add to the pain to an already losing position. So I'll lock in my profits a little at a time to recuperate that loss. Again, my stop for that bigger trade is this here, this 3,200. So if it ends up closing above that, I'll take that 7K loss. For right now, I'll just go ahead and lock in my profits on that one and see what happens. I'll give it till the end of the hour, and I'll see what I do. If I'm going to lock this up, get out of everything. For right now, the 30-minute looks amazing. I love the way the 30-minute looks for the move lower. I don't like this double bottom here, obviously for the purposes of going lower, but overall, I do like the way this looks for the continued move lower. I mean, this week could be a massive, massive push lower based on what I'm seeing here. And today was expected. As expected, was expected to be a choppy day, right? We had a nice little rally in the morning, but overall, it was going to be a choppy day just based on where the tick opened. Everything signaled for choppiness today, right? Even the ad. Here we go. As I had stated on the previous video, you guys can see here, I said since the ad was going to likely close on the levels up here on the red zone, there was a good chance that we were going to get a solid gap lower. Now, obviously, we can't guarantee that, but based on history, it's just something that tends to happen over and over again. So we can make our decisions based on that information and say, hey, you know what? We're likely to get a nice little gap down tomorrow. So you may either hold your positions or decide to get in short at the end of the day. Now, you guys saw that I was converting some of my positions, even though I had a lot of puts. I was already saying, hey, this is going to be my stop right here, so you guys can see the pivot where I was going to make my decision. So I was like, hey, let me come back in an hour and see where I'm at, and I'll make my decision. Now, being that this is Amazon, and no matter how much I believe we're going to get a gap down, I can't guarantee it. So I had to lock in my positions, and I'll show you guys what that looks like now. But as you can see here, it went from 3,200 all the way to a high of 3,222. And as much as we can get a gap down, we can also get a gap up. There's no way I can guarantee that we were going to get Georgia votes and issues like this, right? So this political landscape is any man's game, right? So it could have went in either direction. Even though I have a bearish, slightly more of a bearish bias, I like to plan for both sides. And I'm not going to put myself in a position where I'll extend or add to the pain, like I said before. In any case, we can always get back in. So you plan. So yes, I took a $7,000 hit. Yeah, Ron, but if you would have stood in, you would have been up 10 to 15,000 this morning. You are definitely correct, Joe. But I have to make my decisions at the spot on the moment. I rather lose 7,000 now and just get back in and make it back up easily the next day than to potentially get in and end up losing $11,000 or $15,000 because I was being greedy and not properly executing, right? So if I already said that this is my stop, I need to obey my stop, right? Because once I'm looking at this, so I'm looking at this like this, guys. So let's go ahead and maximize this chart here. I'm looking at this chart here. When I'm looking at it all the way at the edge here, this now starts to look completely different. As long as it stays below that pivot, I'm okay. I'm like, you know what? Maybe I'll hold it. But once it starts to break above it and it starts to go higher, this no longer looks the same, even on the daily. Now it starts to look a little different, and I don't like the way it looks, right? So when you don't like the way it looks, you need to make sure you pay attention, because remember, it's bouncing off of this trend line here. So it bounced off the trend line. It gave you a strong push higher. And, you know, even though I don't consider this a reversal pattern or any signs of a reversal, we don't know in this political landscape what's going to happen. So we could have ended up with something like this. See this here? It got close to the trend line. It went higher, strong candle higher, and then you ended up gapping up and then selling off, right? In this situation, we're above the 50 MA already. Where here it hit the 50 MA and it came right back down. So here it gapped up and then it sold off. I don't think I want to suffer or go through that pain, especially on options, right? When it comes to options, we have time decay, and time decay is obviously going to hurt us. So I'd rather just get back in. As always, you can always get back in, guys. Don't be afraid to get out and get back in as necessary. You want to have good habits when it comes to your trading. You don't want to get into the habits of praying and hoping. So as soon as you start saying, you know what, it'll come back, the ad, or this is telling me that it's coming back. You know, my buddy told me it's coming back. Ron told me it's coming back. Joe, John, whoever. It doesn't matter. It's not a part of the plan. Nowhere in the plan does it say what you think matters, right? It doesn't matter. So you analyze it. You look at it. I analyzed it. I said, you know what? I needed to stay below this pivot for me to be able to hold these positions overnight. And it didn't. So I got out. And yes, I took a big hit. And yes, I would have been up 10 to 15, probably 20,000 when this thing ends up opening. But you know what? It is what it is. right? So let's go ahead and take a look at what our positions look like now. Here we go, guys. So this is the ladder situation we have here. So no matter what, even if Amazon would have kept going higher or gapping higher, you can see here my minimum profit would have been 11.97. You're like, yeah, Ron, but why don't you just take your profits? Why not just close it out and take your profits? It's like, well, because I am expecting it to come down, and by converting it into a spread, I'm actually giving myself the potential to make a little bit more money because now I'm using time decay to my advantage. And always selling is always going to have a higher advantage than buying, guys, right? So buying and selling. So overall, if you can buy a put or a call and then convert that into a spread, but a spread where you have a no risk scenario, right? Where you have no dollars to lose anymore. Now you're like, okay, well, I still think it's going to go down or I think it's going to go up, but let me go ahead and buy a put. And then I think it's going to go up, and then you convert that into a spread. Now you have the potential to make even more money with $0 at risk. That's the situation you want to be in. So like you can see here, I have 3 spreads already in. One, see these ladders here? So let's go ahead and take a look at what these look like. So I have, let me get rid of the bottom ones here. All right, so you can see here, oh, actually, hold on. This is my call and my call spread, right? So I did a call spread. When it bounced higher above 3,200, I went long. I'm like, you know what? I'll go long. I paid $43. I waited for it to go a little bit higher. And this one is not for much, guys. Because again, I told you, I don't expect this thing to actually continue to go higher. So look at how I did this spread. I did it the opposite way. Normally on a call, you're, actually, no, this one I did correct. So on this one, you can see here, I'm expecting it to still come down lower. So on the way up, if it would have gapped higher, I would have only made 62 bucks. But I was like, you know what? But now I have no risk to the upside. But I'm like, you know what? I am expecting this thing to come back down. So I'm going to lock it in before the close. Imagine if I wouldn't have closed this, I would have lost quite a bit of money. So let's go ahead and take a look at this. So I sold the 31.95. Let me get rid of it. I would have lost $4,300 here, guys. Right at the open. Boom, I'm done for. $4,300 loss had I not locked this position in, right? But I said, you know what? I'm not expecting this thing to continue higher. Let me go ahead and lock this thing in. Boom, $62 to the upside. But now I'm making $562. Easy money. Easy money. So as long as this thing closes below 3,200, I'm making $3,200, right? So let's go ahead and take a look at the other one. So my 3240s, remember that one? That one, again, I would have lost $4,600 at the loss. At the open today, easily would have been up over $4,000 on that one. So you can see here, $460.33 to $4,000. So we'll see how that one ends up. So I had to convert that back into a spread again because it bounced back over to 3,200, and unfortunate, I only locked it in at 985 on the upside, but to the downside, guys, again, 1485. At the $700, $800 that I collected yesterday, I'm still making pretty much the initial profit that I was looking to make on that one anyway. So we're good there, right? So, but you see the options, the opportunity that I'm giving myself here. Every time it bounces higher, I can buy back the ones that I sold for less as time goes on without having to constantly get out of the ones that I bought. Because I'm not going to be able to pay those prices again, especially if I'm this deep in the money. So I can say, hey, you know what? Let me get out of that. Let me get out of the ones, buy those back, make that profit. And when it starts to come back down now, I give myself the opportunity to let my position continue to grow on its own without the locking portion. Okay, so that's the second one. And then the last one was the 3,200 strike. Let's go ahead, 3,200 put. This one, $3,700 at risk, right? So had I just left that open, again, today in the open, I would have been up around $1,000, I guess, on this one. So let's take a look at this one, 3,200, and I did the 31.95 puts. Here we go. So this one at the minimum, 150 above 3,200, and here 650. So no matter what, making 650, 525, and $1,400. So when we put all of those together, we're looking at, boom, $2,600 right there, guys. Too easy. And as you can see here, we're looking at this area here, right? $2,600 so long as this thing closes below 31.92. Too easy, right? And then I'll keep doing that. I'll keep just adding to those layers so long as this line here stays above 0. And again, why do we do this? Because time decay. We're putting time decay in our favor, and we're giving us the opportunity to trade both directions without actually having to get in and get out of the ones that we bought, right? So we can just sell a different strike, let those strikes go up and down, and if we're able to buy those back for less, we'll buy them back for less. If we're not, then whatever. We already locked in our profit, so we're good to go. And that's pretty much it for this one, guys. Let's see how the markets react today. We have 25 minutes to go, and good luck to everybody.